This asset appears to be ready for a significant pullback, and this pullback can lead to a further downside if the cards are played just right. An upper time frame psychological formation can be the early indication to a larger downside than statistics suggest. Welcome back to the channel on this Taco Tuesday. This is ARCa, and let's dive into ticker symbol META. Let's kill him. What is up, you guys, and welcome back to the channel. Let's go ahead and dive into ticker symbol META. And as you can see here, this is the 8-hour time frame, and we're going to go ahead and touch bases first with that psychological formation before we get into the statistics, right, team? So I actually ran a massive volatility versus stochastic momentum backtest on the daily time frame, and there appears to be a downside ready to go on this as the signal has potentially fired. So we're going to go ahead and go over those details now, okay, team? So let's go ahead and just observe this right now, right? So we are clearly in ascending or a rising wedge, better said, and this rising wedge usually ends up with a downside, with downside to the asset, right? So this is a major time frame. This is an 8-hour time frame formation, which can lead to a further downside if actually realized. So let's just take a look at the potentials now. So we now have an 8-hour closure beneath the regression. So what you're seeing here is actually a fake out. So we get that fake out, you know, we make the bulls believe that we're about to run to the upside, but this thing completely fakes out and comes back in, reacquiring the inside of the wedge, and it then falls further, right? So this 8-hour candle, pay close attention, as it is falling beneath the prior bar low, and it's actually continuing to the downside, and it definitely closed beneath the prior bar low as well. So this is already an indication that there could be a further downside ahead. And if I were to put a quick discretionary guess on this, I would say anywhere, you know what, there is kind of a focus area within this, right? So yeah, I'm thinking somewhere between 364 and about 361.90. So 364.02 and 361.90 appears to be a zone for us to kind of look at, right? Temporary downside. Know that this asset has a larger average true range, right? So we can definitely take advantage of some of those larger moves to the downside. So let's just go ahead and observe a couple more things here, right? So let's see. Remember that sorry, you guys, that's my little guy screaming in here in the studio. Don't mind him. He's just trying to make sure that we are trading okay. So if this tends to break down from, let's just say, around here, right? If it breaks down from this point here, which would be, you know, tomorrow, Wednesday or something, then the first implied, you know, target for this, being that we have a close here, and suggesting that we were to break down from this point here, you know, it's kind of a large move. It would indicate that a potential 340.11 bottom could be it. And, you know, and of course, you know that there are other targets regarding this formation, right? So let me get rid of that magnet here. And, you know, the center of the triangle being another one of those potentials. So remember that these are psychologically backed targets, right? They're not statistically backed, and they're certainly not as credible as something of a hard back test or, you know, a tangible data set could give you. Right. So, and then the final target would, of course, be the back end of this of the triangle, right, which would be right about here. And this would then imply the lesser probability target to be right at about 302.14. Of course, yeah, that's kind of a major downside there. I do not think that would be the case. Let me just see if I can tighten it up a little bit more here. Oh my goodness. Yeah. You know what, my OCD is actually getting the best of me right now. I would say right about there. Yeah, 301.59 should be okay. It's a psychological target. So let's go ahead and review the statistics here, right? So this is going to be a daily volatility versus momentum, stochastic momentum backtest. The conditions here are anytime that volatility has contracted into the critical contraction zone, which is within the 15th percentile, and started an expansion phase. That paired with a downside, I have taken note of every iteration where that has happened in the daily time frame throughout its entire trading history, right? So here it is. And this is these are all the samples that you're observing here, right? And what came out of this is actually this data set here. So let's just go ahead and start observing the distributions, right? So we have a total iteration count of 67, 55 of which have been correctly guessed to the downside. You know, that this is pre-filled. So we can just go ahead and put it like that, right? Wow. Downside, right? So, and obviously, average, we would do not an upside thrust. This would be an average breakdown. So we can leave it like that. Right? Okay. So yeah, so 55 iterations of which were guessed correctly to the downside. That gives us an 82.09% probability of this setup realizing an average breakdown of 5.49% over the span of about 11.45 days. Now guess what? That signal fired yesterday and with an average of about 11 and a half days. So the signal fired yesterday, meaning that we can take into consideration the opening of yesterday's candle, and we can measure that mean as the first potential target. So if this, yeah, so it would have opened here at the opening of this prior day candle, which is at 370.16, and this has already declined into the 367.46. The minus 5.49% downside is implying a target of around 349.82. So that those are those are part of the statistics here. Please remember that they are statistics; they are not certainties, right? So this is, I mean, an 82.09% probability base is pretty massive, though. Okay, so now the standard deviation is actually set. We can actually see it here in the bell curve, right, in the standard distribution curve. So yeah, we're looking at where is it? 4.75% of which I actually forgot to put on here. So 4.75% standard deviation. I calculated the upper bound of the first, I'm sorry, the upper bound and lower bounds of the first, second, and third standard deviations as well, just in case we start moving beyond the target that we're observing here, because of course we're looking at a major time frame rising wedge of which can definitely signal some potential downsides of which can be very critical, right? So yeah, but first, first we want to observe the immediate targets. So seeing that we have a 4.75% decline from the opening of that signal, let's go ahead and take a measurement of that, right? So the trick here is to play the play, right? Of course, I'm giving to you the whatever's happening here based on stats, but then how to execute the trade is a whole other deal. And if I can be of any support, I would actually suggest, or I would actually ask you to join the ARCa Bulls trading team, as we're going to be trading this live. So that's about 8 minutes and 19 seconds, right? So please go ahead and refer to the link at the top of the screen here, right? At around 8:27. Let's just say that. Okay, and you'll be prompted into the Discord. Know that to join the Discord, you would have to use a PC, and then moving forward, you can use your phone and all that good stuff, right? So it's just to join the team, you would just need the computer to join, or some type of tablet or something. Discord is working on all that stuff. Okay, so yeah, that first target based on a standard deviation, which is 68% of the results, is landing at around 352, 71, pardon me, and 349.82. So let's take a inverse fib from the prior day, low to high. And it appears as though we definitely have some very, very nice rhyming. So check this out. This is 349.82 landing right at the 349.99, 3 spot 618 golden mean. And right over here, 352.71 landing at 352.50 at the 3 spot 272. Those of you who know are going to say, oh, what do you know, ARCa? It's both of your favorite Fibonacci retracement targets. Right? And yes, it definitely is. So again, with that freaking magnet, let me go ahead and get rid of that and redraw the potentials here, right? So yeah, let's go ahead and just take into account the 3 spot 272 and the 3 spot 618. as an area where we can see an overall downside. Now, of course, this is not to say that it's just going to swoop down here. It's to say that this is the probability that it can go all the way down there. We are talking about a pretty large move here. I'm really speaking of almost a 20-point move, right? So probably 17 points right around there. So we have to be very careful over how this is executed, right? So let's make sure that we can join the ARCa Bulls trading team so that you are aware over the strategy in trading something this large. As you all may know, we actually just banked big on the statistical play for the Tesla drop, right? So we actually, today today marked off hundreds and hundreds of percent in the ARCa Bulls trading community, right? From that gain on that downside of Tesla. So let's go ahead and let's be vigilant, and let's make sure that we practice proper risk management and make sure that we can keep discipline and consistency with our portfolio gains. All right, team. So I think this is a pretty good place to leave off. Meta definitely has a play, and I definitely think that we can have an execution trade or a strategy play as soon as pre-market tomorrow in the ARCa Bulls Discord, right? As I start streaming on YouTube only until 7, temporarily until I fix the Discord, and then I'll go completely private and silent. But yeah, team, consider joining, consider hitting me up, and we'll see about the trades, right? All right, team. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night, and I promise I will, catch you at the bell mañana. Adios. Yeah.